You see it everywhere. It's the stock that makes headlines with every single tweet, with every new factory, with every price move. It's Tesla. And the big question is, beyond all that noise, is now the right time to buy? Hey everyone! In this explainer, we are going to break down the super complex world of Tesla stock, and we're going to look at it from every single angle. Now, just to be clear, this is not financial advice. Think of this as your guide to understanding the core arguments that are driving one of the market's most, let's say, spirited debates. So, here's our game plan. First, we'll dive into the good stuff, the bull case for why you'd be optimistic. Then, we're going to flip the coin and tackle the major counterargument, the bear case. After that, we'll actually give you some tools an analyst would use. And finally, we'll put it all together to frame the investor's decision. Okay, let's get right into it. The bull case, the argument for Tesla, really hinges on four potentially huge catalysts. And it all kicks off with the company's main gig, building and selling cars. And what a gig it is. I mean, look at this. In a recent third quarter, Tesla delivered almost 500,000 vehicles. That is a new record for them, and it blew past what a lot of analysts were expecting. It just shows you there's some serious strength and demand for their cars. Now, you might look at this number, 7% growth, and think, that's okay, not amazing. But you have to know the story behind it, because that's what gets investors so excited. See, this isn't just growth. It's a huge turnaround. It reversed 2 straight quarters of declines. So it's a signal that the main business might just be getting back on that high-growth track everyone's been waiting for. But here's the thing. Tesla isn't just a car company anymore. Check this out, 12.5 gigawatt hours of energy storage rolled out in 1 quarter. That's another record. And to put that number into perspective for you, that's enough juice to power millions of homes for an hour. The energy division is quietly turning into a monster catalyst and a real profit machine. So let's recap the bull case. You've got the car business getting back to growth. You have the energy division just exploding. You've got the promise of cheaper cars on the horizon to open up the market even more. And then you have the massive wild card of future tech, like robo-taxis and software. That is a really, really powerful mix. All right, so that's the sunny, optimistic view. But we've got to look at the other side. So let's talk about the bear case, the argument against buying. And honestly, it pretty much boils down to one critical 3-syllable word: valuation. And this quote from The Motley Fool just hits the nail on the head. Even with all those amazing things we just talked about, the price of the stock itself demands that the company executes perfectly. There's just no room for error. In this number right here, this is the heart of the bear case, a price-to-earnings ratio of over 250. This is a basic metric that tells you how much investors are willing to pay for every single dollar the company actually earns. And wow, this chart really puts it into perspective, doesn't it? Just look at that bar for Tesla on the left. It's an absolute skyscraper compared to the average company in the S&P 500. So while a typical big company trades for about 26 times its earnings, Tesla's valuation is, well, it's in a whole different universe. So what in the world does that actually mean for you, the investor? Well, it means the market isn't just paying for the Tesla of today. It's paying for the Tesla it expects to see years and years down the road. Basically, all that future success, from robo-taxis to dominating the global energy grid, it's arguably already baked right into today's stock price. Okay, so we have this amazing growth story on one side, clashing with a sky-high, maybe even terrifying valuation on the other. How do you possibly sort through all that? Well, let's give you a basic toolkit that the pros use to look at any stock, not just Tesla. First up is what's called fundamental analysis. And honestly, this is exactly what we were just doing. It's where you look at the company's actual numbers, the deliveries, the profits, and yeah, that super important P/E ratio, to figure out if the stock's price is actually justified by how the business is doing. The other side of that coin is technical analysis. Now, this approach doesn't really care about the company's balance sheet. It's all about market psychology. Analysts who use this are looking at stock charts, they're looking for patterns, trying to guess where the price might go next based on how it's behaved in the past. And a really core idea here is something called support and resistance. It's simple, really. Think of support as a price floor, a level where buyers usually step in and stop the stock from falling. And resistance is the ceiling, where sellers tend to show up and take their profits. Finding these levels on a chart can help you spot potential turning points. Another really neat tool is the RSI, or the Relative Strength Index.
It's basically a momentum gauge that goes from 0 to 100. If the reading gets above 70, it often means the stock is overbought and might be due for a little cool down. And if it drops below 30, it might be oversold and ready for a bounce. So an analyst would look at Tesla's RSI right now to get another piece of the puzzle.
Okay, so we've got our toolkit. We understand the bull and bear arguments. Let's bring it all home and weigh the evidence to figure out how an investor might frame their final decision. And here it is. This is the whole debate in a nutshell. The bull case is this incredibly exciting story about innovation, about growth, about changing the world. And the bear case is a simple but very powerful warning. The price you have to pay for that story is incredibly high, and it leaves absolutely zero margin for error.